This conference will now be recorded.
Welcome to Level 1, Lesson 1. And as always, everything that we're going to be talking about today is for educational purposes only, and nothing is intended as any type of investment advice. All right, so let's talk about what this round of class is going to be. As we talk about every single round, we always want to kind of have a focus on, mainly what we're looking to get out of it and what we're going to implement going into our trading after we're done. So this class is going to basically be bringing things back to basics. It's funny because we know all the rules once they're said, and it's interesting that once a stock starts going, how easy it is to kind of forget those things and really implement them in what we're watching into trying to understand how to trade a specific stock and really understand basically what the market makers are telling us what that stock is going to do. So today's class is our first class. What do you think the most commonly questioned stock I get is? If we had to pick a ticker that I commonly am asked about most often, and here we go, is Tesla. So it's interesting because I love Tesla, but there's a certain way that we have to kind of go about it, and it's actually a lot simpler. We're going to talk a lot about Tesla in this first class, and then this afternoon's class, what we're going to talk about is we're going to start figuring out what it looks like, the different ways that market makers set up stocks for what's going to happen, what it actually looks like. It's going to kind of carry into possibilities a little bit. But really what we need to start figuring out is there's different ways that a market maker can go about things. So it's interesting. This morning, if you look at Tesla, what what a great move. Actually, I want to start first with my first bullet point. Why do we like Tesla? Davis Mullen. Because the big range, okay, and it gives prints. Okay, yes, it's an everyday stock. All right. And, obviously, and I tell you guys this all the time, my favorite type of stock is always going to be to trade a stock with a new story. It's just there's a lot less information. There's a lot less that we need to basically understand what's going on because a lot of it's going to be really kind of just happening in that moment. And, we can basically go from here. But what kind of stocks have we been really able to trade lately over the past months? So the reason we do like Tesla is really because it's an everyday stock that has a big range and it constantly prints. But it's funny how lopsided the way we go about trading it and the mental mindset going into trading a stock like Tesla. And now, there's other stocks like this. You could go look at, NVDA, AMD some days, although its range definitely been kind of taking the hit a little bit. But Tesla's one of those stocks that it really just every single day we know there's going to be a bunch of range that's going to come into it. But what's our mindset? So first of all, it's a what type of stock? We have our brand new stories, and then we have our textbooks. Okay, a longer story that comes into it because first of all, the more that a stock is going to move, the more likely we're going to end up seeing prints coming into it. But it's the mindset that we go in. So when we think a stock's got a big range, it's interesting how many of us actually go into that stock only looking to make a small amount. So yeah, it says $8.51. Is that range really? I mean, it's definitely skewed a bit just because of the price levels that it's been changing over. But we can safely say that every day, we could expect Tesla to move about $5, right in that area. So when we go about looking to trade it, how much of an effect does one grouping of prints actually have on that stock? So just one level, one grouping of prints, how much effect does it really have? Really just one increment most of the time. Now, most of the time it's going to be trading in 50 cents at first, and then if we get, the big range where we go over that $5, we end up seeing it move into the dollar, but we're really only looking at about 50 cents coming into it. So how do we combat that? Because is it a reality to try to trade Tesla in 50 cents? Is that something I can realistically do? Chick, chick. Why not? Why can't I actually do that? I mean, you could try, but it's not going to work out well. What's the reason behind it? 12-cent risk on Tesla is laughable. And that's really what it comes down to is the risk versus reward. It's just not possible to have a great risk versus reward in focusing on one set of prints. And I also want you to think about it. If we know the stocks like that are a story, shouldn't we have a story built to actually trade it? I mean, it doesn't get much simpler than that. We call it a story stock because it has a story. So just setting on one print, one of the biggest mistakes that I see, and every question I'm always asked about Tesla is, well, these prints. But can you really only be focused on one set of controlling prints? Is one set of controlling prints actually going to give us the ability to have any type of real risk versus reward, or do we kind of have to get lucky and almost be perfect? And when we almost have to be perfect, that leaves really no room for any type of error. And not for nothing, but I don't care how long you've been trading, there's always going to be some type of error involved in it. It's, no one's going to be perfect on the cent every single time. It's just not possible. Trying to fly a kite in a hurricane, well, basically. So in reality, in order to trade a story type stock, don't we have to have multiple prints that align to tell us an overall, a larger move? Okay, you can put it as letting something getting far away from where it needs to be. You can get, based off personality, that it has multiple prints at multiple levels. But we're not trying to make 50 cents on a dollar move. And if you do that, you're going to find out that a lot of times you're going to end up being wrong before the stock does exactly what you expect it to do. And the reason for that is because a 50 cent move in this, it's just a tick. It's 1 second. So I can't go into a story type stock and actually and think in my mind that, okay, well, if the stock moves $5, I'm just looking to make $1 out of that. That's not really how we have to go about it. What we have to do is we have to look for a setup for a $3 move. Really, a $2 move is pretty much the minimum that we want to see, because anything under $2 is going to be almost impossible to actually cut our losses. And then what happens there is we hold on to it. We expect it to come back. It never comes back. Boom. All of a sudden, you have this huge loss that's sitting there. So we have to start to look at these and think, how can I build an overall type trade within it? Okay, this morning, I want you to look right here. So when we start off, whose move was this morning? Okay, the minute the market opened all the way up to its high of 165.49. Whose move was that actually? Is there really a justification for being involved in that trade long? I don't care what the prints are. I want you to think about it, and I want you to think about what the reason why. 160 S from the other day, I guess you could say not for us. So that's the thing. That's a great move. And a retail trader, when they see something like that, they want to be involved in it. But that move was actually for somebody previous. Had nothing to do with anything that we could do. So you could say 165 has these great ass prints up there. It hit it 3 times this morning. Well, that's wonderful. But what were the first prints? If you were paying attention this morning, where did we actually get our original prints? See, that's the thing, because can I really have a personality of a stock within 5 minutes? its full personality of what it's going to be expected to do that day. Just because it moved up in the first 5 minutes like that, does that give us the personality of a stock that's an exception? It doesn't. So our first prints that we actually got were 2 asks followed by a bunch of bids. Okay, and what is that pattern? What does that tell us when we see ask followed by a bunch of bids? Yeah, so in the time frame, we're going to be expecting a short move to the upside, and then we're going to be looking to come back down. So now we come to 164. We come to 164, we get nice ask prints. It was like 8, 10, somewhere like right in that area. But then we get to 165. So right there, is my story enough to be looking to take a trade in this, knowing that it had a quick move to the upside, short duration of time to the upside before it would end up coming back down, and 164 ask prints? Is that enough? Not yet. Why is that? Well, 164 does need to pull back, but it hasn't really shown us anything yet because it's not long enough to have a personality. So we can't say it's an exception. We can't say it has a pullback. We can't get a quick pull, underneath 164 to take a high percentage trade back up. So at this point, we're really just waiting. We're waiting for the opportunity for a full movement of the story that's aligning with us. So now we see we should be building at 164. 2 ask prints followed by a bunch of bid doesn't technically tell us that we need to go under 163. It does tell us that 163 is the original market maker that came into it, so that's an important number. Okay, we're not going to expect it to break 163 yet. And if we're looking for a pullback at 164, does the risk versus reward make any sense yet? Doesn't yet. So now we're looking at it like, well, a quick move up, 164 needs to build. Okay, so now I just want to take that trade. The second I see a bar coming towards the downside, that's something that people that are watching Tesla are going to look at. Now I have these 2 prints. Now, not for nothing, but there's really not a lot of science behind, well, not science, but calculation behind a couple bids followed by a bunch of asks. We know it should probably be about 1 increment. It could be more, it depends on the situation. So even though I have those 164 ask prints, in any way, do I have a high possibility of taking a trade yet? Not really. It's not there yet. Because that really, even if the trigger comes in, that's only leaving me to go back to 163 from 164. By the time I get into it, will I be able to control risk? So really just having that risk mindset, there's no trade there. So the expectations of it pulling back from 164, even if it did, it's still not a trade. And what happens in these situations, especially with story stocks, that's where people get their shakeouts. And that's where they get stuck and the stock goes away from them way too quick to the other side. Because if we're actually bringing it down to basics, what's the number one part of being a successful trader? This will never change. Cutting our losses. So if we're looking at a stock like Tesla, right there, our risk versus reward, the number one thing that we have to do still can't be there. So if it pulls back from 164, great. It's not a trade though. And more times than none, we take that trade, we're gonna get burnt because it's just not the right setup. And if it's not the right setup for us, is it going to be the right setup for a market maker that has way more shares than us? Probably not. There's work that still needs to be done. You got to understand, we trade exactly like they do because we're following them. So if it doesn't make sense for what I teach you doesn't make sense for us, it doesn't make sense for them. And if it doesn't make sense for them, why would we even try to take that trade? Now let's go another level up. What happened at 165? It actually hit 3 times. First time was, I don't know, it was about 10 prints, give or take, somewhere right 8, right in that area. Second time it came back to 165. Now, about the same amount. Okay, and then the third time it was like 4 or 3. It was not a lot at all. So the second time building and the third time coming back up. So now it's hit 3 times. Bring it back to basics. What does that tell us when a stock hits the level multiple times? What basic expectation do we now have? So a bigger pullback, I would say big pullback, because bigger is ambiguous. A big pullback now gives us the ability to move past $1 and really get to what our original price target, which is now what number? From the original market maker, 163. Now, can I control a loss with a $2 expectation? Does that now set me up for success within that trade? Yeah, 50 cents, I could definitely do that. 50 cents to basically make a $1.50. Okay, really, $2 depending on your entry, so on and so forth. But you have to be in before what number? So your entry would have to be in before what number? 164.50, right? Because that would allow us to be able to test and go back up to that 165 amount. But do you see how the overall, now the story we have built gives us an overall movement of what the stock is going to do versus telling us that there's controlling prints at a level. 164 didn't do that. Now you might ask, why 165? Well, now let's think about it. This was a perfect setup for us to be looking for that number. Number one, big psych level, right? 165. Hit multiple times. Think about now we have this story, and then on top of that story, we have all these other variables that are coming into it. So isn't it a very high percentage that this stock goes to 163? Versus seeing prints that mean, short duration of time pushing up at 163 and getting 164 that technically needs to build. But do they have to build it right this second? No. And because it doesn't make sense, because 163 is that magic number. That's where the first market maker came in. And not for nothing, but when we have bids followed by a bunch of asks, is that a clean level? It's not. Clean level basically just means all ask or all bid. That's not a clean level. So what can we almost guarantee is going to happen at that 163 spot? Games. So understand, just bringing it back to simplicity. Even though this is a story stock, bringing it back to that simplicity stops you from getting shaken out trying to trade it downwards from 164 because risk versus reward cannot be met. That stops us from taking that trade, okay, which we would have been completely shaken out of over $1 almost instantly. Okay, and from getting shaken out from there, we now let the story build up. I want you to think about something. Quick move up, short duration of time before coming back down, 163. 164 needs to build. 165 hit 3 times telling us they want to build. Is that enough? 165 being a psych level, multiple times, bigger expectations. We meet what needs to happen in a stock like Tesla. So you can't just say, well, 164 didn't pull, and this is what I get constantly. It's, well, what about the 164 prints? It was supposed to bid, but it doesn't matter because you want the simplest rule there is you have to cut your losses and you have to be able to control your loss. You know, if a stock has a $20 range for that day, can I expect to control a loss that's pretty much anything under $1? And I mean, that might not even be enough. So we have to understand that if we want to trade a story stock, it's not that we need to know the whole previous story. It's not that we need to know there were 163 bids from, or ask or whatever from 2 days ago or 3 days ago. What we need to do is we need to let the stock build us a story for today. By allowing it to do so gives us what? When you have that many things that literally coincide with each other, that allows us to get our alignment. And that's where you get shaken. That's, getting shaken out versus having a spot that actually makes sense for a trigger. Now, don't get me wrong. That first bar, this thing almost went down to 163 just in a bar. So was that going to be an easy entry to get? Hell no. Not even close. But once we came back up to 165 and it hit again, what are they telling us? And it's not that that wouldn't have been a good entry. I mean, technically you had an entry right before it, right here, to get in before we came back. But, okay, and why was that a really high percent entry? So technically you would have actually had a $2.50 if you were really quick. But what variable gave that even a higher percent entry of it moving back down? What's our high of day? 49. What's it mean when a stock pushes into a level, doesn't hit, and triggers back down? Is that a nice variable to add? I'd say so. But again, is that an easy one? Not really, just because, when you have a $2 bar out of nowhere. But this is what I'm trying to get at is by, taking things back to just basics is really going to help us not only with new story stocks, because new story stocks, again, are, in my opinion, are easier to trade because it's a brand new story. But when we have these story stocks, it's not about seeing the whole, not about knowing what happened last, the 2 weeks ago, or knowing what, obviously if there's just overwhelming buying at a huge level, it's definitely something that if we know, that's great to know, but we don't need it. What we need to do in these type of situations is we have to allow the stock to build its story first to then get an overall move. Okay, not just, we can't just say, well, 164 showed building prints. How come it didn't pull back from 164? That question should never come from a stock like Tesla. Can it come from, a newer stock or, a stock that isn't a story type stock? Of course it can. But when you're looking at Tesla, there's so much more that needs to go into it because you're not just looking for 50 cents. You're looking to catch that range. And again, do we have to catch it immediately? If the range, we have $4 to where it needs to be. Do we have to be in for $4? Is that even for us to make $4? No, because tops and bottoms, we really shouldn't, we're not going to be hitting them. But when you have that much more room, it's a game changer in the way that you look at these things. Now we come down to 163. 163, we know there's going to be gains, and technically, does it have to pull under 163? Are 2 ask prints followed by bids enough to tell me that the stock should be going down? No. So let's say I didn't take the short and I'm looking for a number 4 trade. Is 163 a spot that's acceptable for it? Works both ways. So now I want to watch the prints for a little bit and let this thing build kind of its story. We kind of understand that 165 is where we're looking to go. So now we see 164, more or less than last time. Like I said, there was like 8 or 10. So we have less. Not by a huge amount, but a bit less. So what's that telling us? Completing their build, or they're getting closer to it. Okay, so it's telling us that they built. Now, is that telling us that it's going to break past 165? It's not. So I want you to think about something here now when we're looking at a stock like Tesla. What do I want to see for this to tell me that it's going to be able to break 164 and continue up? Or what would I want to see? So off level, shorter term trades coming in. Where is the obvious dominant market maker in this stock from today? $165, right? I mean, it was hit the most prints that was at any single level came there. Now I want you to think back to what we were just talking about before. Can I expect this stock to break 165 clean? Just straight through, we get to 165, and then it's just over. Can't. Okay? Because there's a dominant market maker that's sitting there. So I want you to think about something. Yeah, I want to see off-level, short-term prints coming in at that 164. But am I going to? Statistically speaking. Probably not. And what's the reason behind that? Same principle, just different way, different direction. It's not going down anymore, now it's going up. Why am I most likely not going to see blatantly obvious shorter term prints coming in at 164? Think about it. Does it make sense? It would be extremely ballsy. It would tell me that the chances of breaking 165 go way higher. But can I expect, we just talked about this, is making $1 in Tesla a strategy that could be sustained? The risk versus reward's not there. Just like I know 165 is going to be really hard for it to break, and the dominant market makers there, all the other market makers know the same thing. So if we see prints there, they hold so much more weight just because of what we know. Right now, we have 165. The prints at 164 didn't extend it any. All it did was tell us 165 is inevitable. So you guys asked, one of the questions I get asked all the time is, what I didn't see the buying, but it still went up. Technically, do we need any shorter term buying to come in for this to be able to get to 165? No, we don't. We already have what we need there. And where was the actual entry? Where did the entry have to be? So knowing that there's 165 prints all over the place, and that it has the ability to move up, this is another spot where people get caught trying to enter over 164. Again, bringing it back to basics, dominant market maker. Is it easy to pass through a dominant market maker? I mean, the word dominant kind of speaks for itself. And yes, 163 is where your entry was at 163. No reason it had to continue down. That's the spot that we'd have to be looking at in order to even think about trading this. Because once it's at 164, we know that's been hit twice now. So we know there's a market maker there. We know 165's there. Getting in over this 164 level leaves you open to getting shaken out almost guaranteed. That doesn't mean that it's not going to get to 165. And this is where the problem lies of when people, say, well, I got shaken out and then it did exactly what I thought it was going to do. Yeah, because all you're thinking of is you're not thinking about the situation. I mean, look, you get in over 164 here. What just happened to you? You just got slammed. And this is how Tesla works. Because it's, you know what, when the stock's at 1450 and you get slammed, but you're in at 163, yeah, you're going to lose some profit sometimes. It's going to happen. But there was no reason for it because technically, can you even get in at 164? Never trust a car with no motor. But see, this is the reason I felt the need to have to go over Tesla is because if you actually think, and it's so simple when you just talk it out loud, but when people are trading it, I get these questions. I mean, and a lot of times it will be like 40 different like off-level prints. There was like 2 prints here, or a couple prints here, which in reality doesn't really make anything because what's really controlling Tesla? Check, check. Okay. Yep, you got me. Yeah, but it's the controlling prints. The controlling prints are really what, at the end of the day, is controlling it. I mean, that kind of sounds silly, but sometimes you could have off-level, shorter-term prints, but that doesn't really happen in Tesla because there's so much that's going on for longer-term stuff. That's why you have to build a story within it. You have to pick your entries perfectly. Because even again, just because it needs to get to 165, does it need to get to 165 now? No. That's why I need that room to be able to play with. I can't go in at 164 trying to make $1. The risk versus reward's not there. If I know the key to being a good, consistent trader is going to be cutting my losses, and I have no ability to cut that loss, well, I'm not following the rules, am I? So what about this print line, 163.22? Could I take an entry here off this print line? Would that be a viable spot to be able to take a entry? Yeah, why not? You have the print line there. Again, 163 is not really being respected that much. You have higher lows. Yeah, this would be a spot to look for. Okay. Now, there's a difference here, though. Would it make sense to see off-level buying coming in at that point? Would it make sense to see off-level buying coming in this area? Yeah, it absolutely would, because again, it fits the risk versus reward. It's a possibility now. When we came over 164, yeah, I would love to see buying there, but overall, it's just not going to make much sense. See, the thing about the everyday stocks, if you're going to look at it every day, you start to learn what its personality is like and where it comes in. And you know that a market maker is not going in a stock like Tesla for 165, dollars to make $1. It's not even that they wouldn't do it to make $1. It's that they can't, the risk versus reward's not there. So if risk versus reward's not there, then it just doesn't work out. All right, let's see what we got here. So we come in at 163 and nothing. Oh, in between the bid and ask. So if I want to trade this stock again, I'm going to need more of a story to start coming in. So that's not bad, but unfortunately, that doesn't really give us much. They were bids? Okay, perfect. So that 163 brings it to where? What's our calculation there? 162. These 162 bids? Is that going to bring it down to 161? This is an interesting one for you. Not enough. So how come it's not enough? I tend to agree with you right now, but there's a specific reason why I don't feel it's enough. And in a different situation, I would feel it was enough. Not range, not the volume. Volume's plenty. Not the bar it hit on. What's going on here? Multiple print lines. Look at the congestion here. They obviously weren't confident enough to take all the orders at once. It actually got hit twice. So technically, could that be two different people? Yeah. But if it was just a regular level and there was nothing really there, then I wouldn't have a problem with that. But now looking at it, with all this congestion coming in, does that give us a real vote of confidence to be able to push through it? So you got to think about it. When we have a regular level, it's like a slab of concrete. And the more that's there that's congesting it, just think of the concrete being thicker. And the thicker the concrete, the more work it takes to break through it. Again, one of our basics. Okay, you have really strong levels, which the concrete's thicker, and you have really weak levels, which the concrete's pretty much non-existent. So it's when I see that, it's almost like maybe. And if I'm looking at saying maybe, is it enough? There's this wonderful thing that a lot of us forget sometimes is we don't have to take a trade when we're not happy with what we saw. I don't have to draw my chart down to 161 because I'm not confident in it. Okay, when we come back and we look, I don't see much there that's really, enticing it. Now, 165 hitting that many times, could it be a $5 pullback off that? It could. But I would expect, because we still have another, $2 to the downside, $2.37 or whatever to that downside. Okay, that 162, I would never follow. Because it's just, again, that congestion, the way that it was hit, just not enough. Look at the difference between 163 and 162. So these 63 you guys said were bids. That's a big difference. Okay, and what was it? What's another difference of why it was so easy for it to just break down to the next level? Well, there was no print line there. Once it broke underneath the print line, it had easy sailing right to that spot. And you can see it got stuck there because of this congestion. So not going to be enough. So you could say bid prints at 162, but does that really mean anything? No. So if it didn't mean anything, would that be a good spot to look to be getting in for a long trade? No. Because that spot, even though, yeah, again, I mean, there's a lot of congestion, it's going to be very hard for it to break. That just didn't give enough to really to show us enough to be able to push back up. Remember how much harder it is for a stock to go up versus a stock coming back down. Okay, it's also 1042. What do we typically start to see right at about 10:45, actually 10:30 as of late. But what do we start to see? Think of the scale of floating versus trading. There you go. Yeah, you get a lot of stocks that start to kind of float. Now, if you have a great story, that stock can float within the story, but it's kind of, you could notice that the trading definitely slows down as we come into that point. Okay, really what I'd be looking for is that 163. Okay, first of all, because 162, I'd be trying to hit the bottom. So I'd want more confirmation. And I'd want to start to see some buying shorter term because it would make sense for that shorter term buying to come in here. I don't mind waiting for 163 for that $2 trade again. I have no problem doing that because it has the story up above. This is a spot I would need to see buying. 163 is a spot I would like to see buying, and 164 probably not going to see any buying. This is making sense. I know this has been pretty much turned into a lesson on Tesla, but hopefully this is going to clear up a lot of questions and more importantly, a lot of shakeouts. Tesla is one of the easiest stocks to get shaken out if you don't think in this manner. Because even though it might look perfect, again, 164 was a perfect example. Looks like we're going to make that trade, but no. Because I know it's going to be very hard to push over 164 just because unless it's going to break 165. If it's going to break 165, we would start to see that buying over 164. And why is that? Why is it so important for Prince over 164 to break 165? Because that's basically a market maker that's coming out there and telling us, well, I know the risk versus reward's higher. So if you're in the trade from 163, that's an excellent sign to see because now you know that 165 is still going to be your price target, but that's an excellent way to get kind of confirmation into those 165 prints going to be able to be broken when it gets up. And when I say broken, yeah, might it play some games at 165? And think about it. When you get games in a stock like Tesla that's got such a big range, those games, even if it's a small game is 50 cents. Even more important for us to plan our trades out for an overall type move rather than trying to basically force a risk versus reward. So when those games come in, yeah, it's going to swing 50 cents in a second. We have to be in a position where that's not going to matter. I have found that this understanding of taking sensible entries on Teslas helps me think about planning entries elsewhere too. So this is a good review. One of the biggest things is that when you don't have as big a range, you're still thinking in the same way, just in smaller increments. But the reason everyone goes to Tesla, because I can't tell you how many people curse Tesla and then trade it the next day. And then they curse Tesla and then they trade the next day. And they curse Tesla and trade it the next day. The reason they're trading Tesla is because it's got a big range. Let's be completely honest. It has the ability to move a lot. But on those days where it doesn't trend, it has the ability to take your account from you. Oh, absolutely. Especially if you're looking at a chart, because I mean, right here, coming in, if you would have gotten over 164, it looks like it's breaking out into a pennant, which would technically give us 165 there. So it's really enticing to try to take those trades. But if you bring it again back to just basics, would you ever actually be able to take that trade? And the answer is absolutely not. It's trades like that that take a morning away from you. Understanding when its personality is going into consolidation is just as important as well. Because there's certain spots that there's just no ability for anyone to be able to take that trade. And when you take a trade in those spots are always going to look enticing. They do this on purpose. Again, why so many people always say, it does exactly what I thought it's going to do after I get shaken out. Don't you think they know where you want to trade? do you not think that they know exactly what a chart looks like that's going to break out? Of course they do. And they utilize that against us. But when you actually, you pay attention to where those right entries need to come in, and we're going to be talking way more about this. We're still it's going to be crazy because you're going to learn a lot, but these classes are going to basically point out the simplicity of of our thought process. Okay, it's going to not only help you take out, the noise that you're going to see in time and sales, but really plot and really understand what could possibly make sense for them. You might hear this statement a lot where there's no way they did all that for this amount. Well, in Tesla, they don't do anything for less than $2. They're not looking to make $1. So that's why it's so important that we're not getting caught up in that middle part. We're really, looking for those extended stories to then align with itself for the overall move to come in. And like I said before, games, a game could be $1. A game could be 50 cents. So if you're taking the wrong entries, just a game before it does what it's supposed to do is going to take you out of the trade. That's why it's so much, I don't want to say it's harder to trade stocks like this because I don't really believe it's harder. There's just a lot more information needed that you have to put all together. Without taking all that information and putting it together, you're setting yourself up for failure. But the one thing about this is how many trades in Tesla does it take to have a great day? It just takes one. Half of one. You know what I'm saying? You could be filthy rich, just one trade a day in Tesla. But it's understanding where that trade has to be and not trying to rush, because the second a stock starts taking off, where does our mind go? This is never going to change. I don't care how disciplined you are. My mind goes there too. I just stop it. But the second a stock, I just want to click. I want to be in. But that doesn't last. I'll get lucky today and lose twice as much tomorrow. It doesn't. There's no consistency that could ever come from that. All right, but when we break it down like this and we let the stocks show us exactly what's going to happen, we use multiple levels. 1 through 4, again, is the foundation of everything that you're ever going to trade. All right, but that 1 through 4 in a story stock, can I use one set of prints in a stock that has this big of a range and it's a story stock? Am I going to base my entire first trade or second trade or morning or day on one set of prints? Is that even possible to go about? Again, when a stock has that big of a range, 164, it might just pop up $1 by accident first before it comes back down. It's that simple. So really pinpointing what the story says and finding those variables to all come together and kind of align. And again, that's in all trading, every single trade. I don't care if it's a brand new stock or if it's a textbook stock. It's the same in all stocks. There's less information. I can take a stock that I'm looking to make 50 cents on, and I can take one set of prints and make that money off that, or make that trade off of that. I can't do that with Tesla because I need an overall, otherwise my risk versus reward can never truly be, I can never really truly be in control of it. If I can't be in control of it, can't be consistent. If I can't be consistent, I lose my account. I don't trade anymore, and I work at McDonald's. All right, guys, do we have any questions? I hope this cleared up a lot and as it comes into story stocks, because this is how it has to be done. Rich, we discussed how your percentages have gone up in the market environment. Is this convo basically the reason precision entries that have been confirmed? Oh, absolutely, without a doubt, because there's less trades to take. So I had put so much more focus into really making sure that the trades that I do take are on point. I'm not going to look to try to make $1.10. I'm going to let it set itself up for the overall move. Because you got to think a stock that's going to move about $5 on average within its range, I have time to let it kind of just show me exactly what's going to happen. Because even if it hits the top of its range, the range of information is so large that even coming back down, I can still make $2-3 on that type of trade. So it's just being more patient and letting the trades set themselves up for you to the point where there's just so many variables. It's like, okay, now this is going to happen. So letting the go by and stock is most logical. Yeah, and really maximizing shares in stocks. So instead of trading, I'm just making up numbers, but 2 stocks with let's say 1,000 shares each, whatever. Okay, I'd rather trade 1 stock with 2,000 shares, because even going in to look for another stock, you know what? I might not get another trade, especially right now. It's like 10:53. At this point, I might not get another trade for the rest of the day. So I'm going to maximize the hell out of the ones that I see. And the reason, from really focusing on high probability as stock, I don't really take 70% trades anymore. Okay, if there's nothing else and it's 70%, I'll still take it because I'll use less shares and I'll control my loss. But that's not what I'm looking to do. I'm looking to really put stuff into the 80, 90% type trade. And this is how you do it. That simple. Think about it. The way I teach you guys how to trade, we're following. It's theirs. They do this. I didn't create this. They just do it, and I saw what they do. It's that simple. So everything we do is mimicking them, just on a way smaller scale. So if it doesn't make sense for us, it doesn't make sense for them either. It doesn't make sense for your 100 shares or 1,000 shares or whatever the number is. It doesn't make sense for their 100,000 shares. And you'll start to see that when you really focus on what we just talked about today. All right, guys, Traders Exchange today at 12:30, and I will talk to everyone in the chat. Happy trading.